It's been incredibly frustrating for crypto investors to watch the stock market hitting new all-time highs in the middle of a war while the crypto market bleeds out, chops sideways, and is essentially bottoming out during this bear market. In today's update, we're going to talk about why this has happened, will it last, and the opportunity that I am going to be taking advantage of. So if you guys appreciate our content, please help us out by sharing it out far and wide. If you're new here, make sure you subscribe and hit that notification bell so you don't miss any of our updates. And all of our community resources are available at zachrector.com. Straight into the update, let's roll. There it is, new all-time highs for the S&P 500 after a nearly 10% drawdown correction, halfway to a technical bear market. We get this bottom coming in for the S&P 500 at 6,300. And then over the past 11 days, we get essentially nothing but green candles moving this thing back up to official new all-time highs. In the middle of a war and a lot of uncertainty with our economy, it has not stopped this stock market. Same thing for the NASDAQ 100. Official all-time high, $26,330 for the NASDAQ 100 index, and the Dow Jones has not made new all-time highs, but it is about halfway recovered from the all-time high, and then the correction that took place, it's already bounced back about halfway. Let's check the Russell 2000, which is just shy of a new all-time high for that small cap index here in the United States of America. This is a fake fiat reality that we're living in. That's the only reason why this is happening, is there's just been pumped so much fiat money out here that's looking for returns, and this market punishes you for not having any exposure, right? The guys that are in all cash waiting for this thing to blow up, you're getting left behind. And this market is just punishing you for not being invested, for not participating. But it's also scary to be coming in as a fundamental investor knowing that the fundamentals don't match, the valuations don't match the fundamentals, and these prices are not going to last. I think that a lot of us know that. And there's something very concerning happening underneath the headlines, underneath the charts and the all-time highs that has me very concerned. For the average American who is cheering on this rally, maybe half of America that doesn't even know where their 401k is at, and they're just getting the messages from their advisor that everything's going good, we just hit an all-time high, there's nothing for you to worry about. Because we're in truly unprecedented times. Since 1928, this is the first time since that the S&P 500 has made new all-time highs in 11 days or fewer after falling 5 to 10%. This has never happened before, or for at least the first time since 1928, which is another data point that takes us back to the crash of 1929 and the Great Depression. An all-time high for the S&P 500, but only 12 stocks in the index made a 52-week high. Since 1999, we've only seen 5 readings that week or worse. So you look at this, it takes you back to the dot-com bubble. It takes you back to the great financial crisis of 2008. It takes you back to the 87 crash, or with this first data point, the bounce in 11 days or fewer, it takes you back to the Great Depression. Right, the end of the roaring 20s, when everything was going good and you were getting financial advice from your shoeshine boy. And that brings us to where we're at right now with two completely different realities. And I think this is not just frustrating for crypto investors watching crypto bottom out and chop sideways down at the bottom while stocks hit all-time high, but it's incredibly frustrating for the American people who are up to here in debt, in bills, struggling to get by, using programs like Buy Now, Pay Later to maybe pay for stuff that they don't necessarily need, like Coachella, but a lot of people having to use credit, having to use their credit card, having to use Buy Now, Pay Later to pay for their everyday expenses and literally to feed their families. And meanwhile, they're watching Wall Street have a party and rally to new all-time highs. See, the stock market doesn't represent the U.S. economy, and it hasn't for quite some time. And the data tells us the true story. The buy now, pay later crisis is getting worse. 47% of buy now, pay later users were late in paying their BNPL loans over the past year. This percentage has risen by 6 points from 2025 levels and 13 points from over 2 years ago, when we were in the middle of, when we were basically coming out of a technical recession. And as we've kind of been saying since 2022, we've been in a silent recession. High-income borrowers, young adults, men, and parents of young kids are among the most likely to miss payments. This comes as 25% of borrowers now hold 3 or more active buy now, pay later loans at once, driven by Gen Z and millennials. And you guys have to tell me about this buy now, pay later in the comments down below. I've never used buy now, pay later. I use my credit cards. I have multiple credit cards, and I try to pay them off every month, right? But this buy now, pay later, it's incredible to me how much this has grown and the stuff that people are using it for. Furthermore, 29% of users are now turning to these loans for groceries and 20% for restaurant delivery or takeout. Transactions using buy now, pay later loans are expected to surge to a record $687 billion in volume by 2028 from $334 billion in 2024. Americans are increasingly fighting inflation with more debt. And similar to the private credit crisis, the buy now, pay later loans, from my understanding, they weren't showing up with a lot of the credit reporting agencies. That's now starting to arrive on credit scores. It's now starting to show up, and these lenders are now having to adjust kind of the risk that they've taken on and really start to understand that, okay, we might be letting these folks stretch themselves a little bit too far. But I only shared this one data point about the economy because it's really depressing. I don't want to list off. I could go through dozens of other data points that tell us the economy on Main Street is completely disconnected from the S&P 500 being at an all-time high 7,000. Completely disconnected from the stock market that's hitting all-time highs. And in fact, I think that the crypto market bottoming out and struggling to catch a bid is further proof of that. And I actually think that there's been a lot of suppression to actually push and bleed out crypto below fundamental value in an effort to allow these institutional investors to make that rotation to get their entry. Remember, we weren't going to touch it. It was all a pet rock until Morgan Stanley now has a Bitcoin ETF. We're seeing other asset managers roll out their ETFs, premium income ETFs, etc. And now even Charles Schwab is rolling out their trading platform for trading cryptocurrencies to their clients as well. These are multi-trillion-dollar asset managers who know that the stock market's topping out and the rotation to crypto is coming, but crypto content has been suppressed across all social media platforms. Crypto can't catch a bid. Right? And they've pushed it below fundamental values. Did some cryptos deserve to come down here? Did some cryptos deserve to go bust? Did some crypto companies deserve to go, close doors? Yes. And we've been cheering that on. But does XRP need to be at $1.30? Is that the fundamental value of XRP? No. In fact, I think that even Bitcoin and Ethereum have been pushed down. And I think that they're going to have a strong bounce as well, too. Even cryptos that I'm not much of a fan of and that I don't own, I think that they've still been pushed below fundamental values before they get ready to juice this thing again. Before they get ready for that rotation from stocks and the AI bubble popping back into cryptocurrency for another bull market. And if you want a prime example of what I'm talking about, this takes us back to the dot-com bubble where we saw companies rebranding as a .com, right? Pets.com, you name it, .com. It didn't matter what you were doing. You just threw .com at the end of your name and you pumped overnight. Well, what do we have taking place right now? Just within yesterday and today, we have 2 companies that rebranded to AI companies and they've pumped hundreds of percent. Take a look. So the most recent and most notable companies that have rebranded or pivoted to position themselves as AI-focused entities in 2026 are Allbirds, which this was yesterday. They rebranded to New Bird AI, and Myzeum rebranded to Myzeum.ai, and these just took place the last 2 days. And what happened here is incredible. This stock surged 373 to 600% intraday. So you had a 500-600% pump yesterday for Allbirds after it rebranded to the AI company. Now today we're watching this stock, Myzeum Inc., rebranding to Myzeum.ai. They announced it after the close yesterday. It's like they watched the other company, Allbirds, pump, and they say, okay, let's do the same thing. This sounds good. So after the market closes yesterday, they rebrand, and today they're pumping 270, up 300% today. This is a top signal. This isn't going to end pretty, at least if you're holding the bag here. Now, I was thinking about trading ideas, and I was thinking, man, if somebody just had AI agents watching and observing for any company to rebrand AI, and then you program your bot to just buy that company as the market opens back up, write it up 100 or 200%, take the money and run, and then on the flip side, short the heck out of these things as they're going to get absolutely smoked on the way back down, right? Write it up and then short the hell out of that thing as it comes back down to reality. I might have to deploy this trading strategy myself. I'll be looking at setting up that AI bot right now. But I mean, seriously, this is a top signal. Just like during the dot-com bubble. Here we are in the middle of this AI bubble. Is AI real? Is AI the future? Yes, just like dot-com and the internet was back in 2000. But are we going to have 5,000 successful AI companies? No. Are we going to have 5,000 successful cryptos? No. So the good news is the crypto space is cleaning itself up. While we have all this froth, while we have this top-heavy stock market all-time high rally with less than, what was the stock? Only 12 stocks in the index made a 52-week high. So you're literally talking about the top 10 stocks that are keeping the whole thing pumped up. And you're talking about random companies rebranding to AI and pumping 500% in a day. This is historical top signals. And I just want you to be ready for the rotation. And the rotation's coming, and it's coming back into crypto, and it's going to come heavy. And I'm not going to be left behind. The Bitcoin funding rates have hit their most negative levels since 2023. Now, this is the funding rate if you want to trade a futures position in Bitcoin or crypto. And historically, deeply negative funding rates have coincided with local bottoms, including March 2020, mid-2021, and after the FTX collapse in 2022. Nobody wants to bid on crypto, which is why it's so cheap to go long Bitcoin or go long XRP, which is exactly what I'm doing. Going long XRP. I'm not touching Bitcoin, but I'm definitely long XRP. And the funding rates are so low, and I could list another dozen data points that show that we're near or at the bottom for crypto, which is why I titled this update. The stock market's topping out, crypto's bottoming. Do you want to enter the trade with everybody else and be trying to pile into the stock market at all-time highs? Or do you want to be going against the crowd? And eventually that crowd's going to come back in. We're going to be positioned and we're going to be riding that wave to new all-time highs for XRP and our other favorite digital assets. So if you're with me, make sure you stick around, subscribe and hit that notification bell if you haven't already. And if you appreciate our updates, please help us out by smacking that thumbs up. Tell your friends, families, and colleagues that it might be time to consider the rotation. Don't give them financial advice, but hey, just let them know what we're doing. I just let you guys know what I'm doing, which is not buying the top of the stock market. It is buying the bottom on digital assets with utility. Thank you very much for giving us the opportunity. I'm thanking the market makers. And the market makers are going to come back and juice this thing to all-time highs. I can't wait. It's going to be a lot of fun. We'll see you guys in the next one. Everything else is at my website, zachrector.com. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.